What's going on, guys? How are you doing? So today we are going to talk about entries. Yeah, you guessed it. So today I want my entries to focus more on the swing trading side of things. But as you know, if you are a keen follower of the activities that go on this channel, you will know that everything that I talk about on the high time frame can be applied on the lower time frame. So I'm going to use the H4, but you can use the M1, the M5, the M15 using the same principles and concepts. So guys, welcome back. And if you are new here, guys, we talk about ICT, we talk about order flow, smart money concepts, beat the market maker, all that stuff. So if this is something you are looking forward to learn, if this is something you are looking forward to explore, this is the channel. Just subscribe, turn on your post notifications so that you'll be notified every time we post content like this. So guys, let's go right into it. So if you are a swing trader, this is going to be very helpful to you. But if you are a scalper like me, this is also going to be helpful because you are just going to transpose what we're going to talk about on the H4 to your time frame of choice. So guys, what we do is, first of all, we understand market structure and order flow. That's number one. What you have to understand is where the market is going. So from what you are seeing on this chart, we can clearly see that this was an uptrend. But with this uptrend, we can also see that we're having our impulses to the upside, right? So if you are looking forward, or if you are looking to get better entries, you have to understand the concept of impulses and corrections. That's the concept you have to master if you have to master sniper entries and everything. So today we're going to talk about how to enter using order blocks and Fibonacci 2. So we're going to talk about the Fibonacci 2 today. I haven't talked about this in any of my videos. This is the first. So guys, you have to really pay attention and watch the whole video as we explain this mysterious concept. So right, so what you do, number one, is identify your impulse. Identify your impulse. Identify that part which is price moving very fast, aggressively, to break what? To break a structure like this. So this is what you are going to identify first. Price going through a high like that. Then you are going to expect price to come back and retest. And so you are going to identify where price has taken out a high like that if you are in an uptrend like this, right? So you are going to mark that up, right? This as the high. Then when price breaks that, you are going to mark this obviously as your what? As your order block. And what are you going to do? So this is quite good for those ones who do work 9 to 5, who don't have much time to look at their charts. So you can actually use these things to what? To trade. So after that, what are you going to do? You are going to identify the order block, right? And you are going to wait for price to come back to retest your order block. That's what you are going to be doing with this, right? So then we have to get the Fibonacci 2 into the mix so that we can actually maximize or have a lot of confluences to our entries. So you can do this, guys, on M5, you can do this on M15, M30, any time frame. I've said this enough. So what you are going to do is you are going to wait for price to come back to the area you have marked. So guys, don't be changing. If you have marked this order block and you are expecting price to come back to this OB, you are going to wait for that particular order block to be retested. If price does not get back to this order block, it's not your problem, guys. Just wait and the opportunities will come. They will surely come. So this is what you are going to be doing. So now you are going to consider this as your low and this as your high. So from here to here, this is your trading range. So you are waiting for price to clear all this aggressive move. It has to be balanced, kind of. So you're waiting for price to retrace, balancing that and retest this blue area. After retesting, you are expecting price to go back to the top of the range. So top of the range. So you are going to wait for price to retest this area and go back to the what? To the top of the range. So this is going to be your take profit. And by now, you guys know where to put your stop loss, not where to put your take profit, because we did a video on that. So I'm going to link it so that you can watch. So that's what you are going to do. Then after that, you have identified your range. What are you going to do? You are going to drag your fib too. So Fibonacci, you're going to drag it, and you're going to be only considering one level, and that level is the 0.79. It's the 0.79 level. That's the level you're going to be considering with these guys. So yeah, that's what we are going to be doing. And let's drag the fib and see what we are having here. So if you drag the fib here, the 79 level is this one, marked OTE, optimal trade entry. I know you guys know about that. You study ICT, so you actually know what an OTE is. If you don't, just type in the description down below, and I will do a video on it maybe sometime later, not after this video, of course. So yeah, so that's the area you are going to expect. So if you are a guy who uses pending orders, so this actually works well with pending orders. So you are going to put your pending order here, right, at the OTE level. So another tip, the order block and the OTE2 have to be aligned. They have to be at the same level. Do you understand? They have to be at the same level like this. The OTE is inside the what? The OB. So it can be just above or below depending on which direction you are going, or inside like this. So the OTE is your entry point. That's where you're going to put your what? Your pending orders. Place your pending orders there and wait for price to come and get you. Your TP is set, your stop loss is set. So it's kind of set and forget, you know. You understand? So this is the entry you are going to be using. So let's go and look at another pair. Oh, okay, let's look at this point. This was the aggressive move which everyone could see, right? As you can see right here, we have this move. That's the aggressive move. Let's drag a fib first and see where we are having our OTE and kind of compare that with the order block, right? So this is the range, and look where the OTE is. That's where we have this big candle, but this is not a good order block. This is not a good order block. What are you going to do? You're going to leave it, because we are swing trading and we are setting and forgetting. We need something very clear. So after this aggressive move, you see this aggressive move. After you see this aggressive move, drag a fib like this, right? So the OTE is actually inside the what? The OB. So your OB is this one. Actually, you have to mark everything. Your OB, this is the OTE, and you are going to enter here, and your TP is going to the low of the range, and you are going to have minimum of 1 in 3 risk to reward ratio. So this is what you are going to do. You are going to place your pending order, your stop loss, and your TP, set and forget, and you are done. Let's look at another one and see what we are having here. Yeah. So what we are having here is this. We are having this aggressive move. So first of all, let's kind of talk about the market structure. So as you can see that we have been breaking this lows. Break number 1, then break number 2, then break number 3 here. That's the range we are considering with this high. So this is the range, and to drag our fib, we are considering the 79% level. And look at what price did. It came back to the 79% level, and that's the level we are having our order block at. And if you set your pending order right here, you are going to have more than what? You are going to have more than 3 risk to reward ratio. So guys, let me give you the last tip. So this works best if you are what? If you are trading and if you are analyzing during the weekend. Let's say on a Sunday, you look at your chart, you analyze, everything is not moving. So you don't have that pressure of these ticks and everything. So everything is stagnant. You just have to get your one order block during the weekend. This is H4. So you get your order block during the weekend. As the market opens, you set your targets, you set everything, you set your pending orders, and wait the whole week for what? For the price to move. Because if you haven't noticed, with currencies, they move like one direction in 1 week. They first do that force move to the upside. So that force move is the move that is going to tap you in your trade. After you are in, you are going to wait for the price to move in the direction it intended to move for that week, and the stop loss is going to be hit. Yeah, it's that simple. So you are going to use the weekend to analyze your charts. After you analyze your charts during the weekend, it's going to be easy to set your targets, and you are going to be sober minded with no emotions from the ticks, from current price and everything. So you are going to do your things the right way, and you are going to win. Yeah guys, that's me. And if you are trading on the lower time frames, guys, just transpose this to the lower time frames. And guys, I hope this was very helpful, and until next time, I'm sure trade what you see.